Hello and good morning. It's Thursday, October 25th. The market rout in the stock markets really is the main theme right now. We continue to see weakness across the board. Yesterday we had some other mixed signals from the corporate earnings side. We have some worries about the global growth, trade wars with China, Fed raising interest rates, continue to raise some concerns about where the trajectory from here. And we can just look at the first chart here, which is basically the Nasdaq. It's showing how this equity rout has continued. We have basically wiped out all the gains for 2018. And if we look at this, Kim, we can see normally when we had a correction and a strong bounce, it continued to higher, but this is clearly not the case right now.
Yes, normally you see a bounce higher than around 61.8 correction at least, and sometimes even 76.4 retracement. But this time it was only around half, and before it picked up again. So it made this kind of what we call a little bit of a bear flag before sellers really took control again.
Yeah, and as you can see, if it is indeed a bear flag, then there is some further downside to go. I suppose the same goes for might as well stay with the charts, the S&P.
Yes, same thing here really. I mean, that correction was actually even smaller. I think it was only around 23 or 38.2 correction. Here I have taken the weekly chart just to give a little bit of overview of where we are in so to speak in the bigger picture. And you can see, first of all, the long-term or longer-term rising trend line has definitely been broken. There is not really any support before around 25.50 level here. Of course, we might see a little bit of maybe minor rebounds the next couple of days, but the mood is definitely bearish.
So in that note, we need to continue to keep an eye on the earnings season. That's really where we should get some input from. Overnight in Asia, we've got the Nikkei down nearly 4%. In Sydney, we're down nearly 3%, and we are seeing the yen starting to receive a bit on the based on that. Gold is also challenging resistance right now, so we are seeing this classical behavior in these two markets. But just take a look at the dollar yen first. On the chart here, you can see we've started to challenge the uptrend from way back in 2000 and well, actually it's from this April this year, so it has been quite a steep uptrend. But we are challenging it right now, and just like we've seen on the stocks, we potentially also have some bear flag formation coming in here. You have a technical view on that?
Yeah, I mean you should pay attention to here. One of the 2 or 3 weeks ago, the low just around 111 and a half, 150 there. If it takes out that one, that could trigger a sell-off down to maybe around the 110.
And Mathias, you're sitting with the fingers down the FX pie, and what are the signals you're getting from the market in terms of dollar yen? Is that the same kind of levels that you're looking at?
Yeah, actually, we haven't seen much if you look at the volatility-wise in dollar yen. We have a small pickup now in vols over the last couple of days, but we don't see much. We need the spot a little bit lower, so we need to break down below the 1150 before we can see a pickup in volatilities again.
And I suppose that's really what also one of the themes right now, and John Hardy has been talking about that on a regular basis. There's not really any reaction in the FX market at this stage, so it seems like all the action is elsewhere. And Mathias, you brought a chart with us just to give us reflection on this.
Yeah, so if we look at the chart, we have in the top half we have the black one is S&P, and then the blue one is then the Aussie yen, which is the most the used proxy hex for equity market. So you see S&P has dropped quite a lot now over the last months, while we don't see much in the FX market. Aussie yen is fairly stable over the last months. And if you compare that back to February, when we saw the big drop in S&P and also a big move in Aussie yen. Same goes for volatility, which is the bottom half. Vol is not really doing anything at the money, is trading sideways as well as the risk reversal. And if you compare that back to February, when we see the blue line is a big pickup at the money vols, while the risk reversal, the black one, was dropping to record low levels.
So basically right now we don't really have a clear direction for the dollar, and we can see that the yen is showing some strength, but the dollar is showing strength against other currencies. We've seen the euro recently. We still got the uncertainty about Brexit. We got the Italian budget, which is still at discussions, which is still hotting up. So there's no clear direction on the dollar right now, and obviously that's compressing these volatilities as we've seen. But back to stock markets is not preventing them from dropping further. And just stay with Europe and take a look at this the DAX, because you've been talking about this head and shoulder now for quite a while, Kim. And
yes, I have.
It's happening.
Yeah, we were talking about this for more than a month now, actually. And here, but I think I will bring it up again and again, just so people don't think that, well, it's just just a little sell-off and then we will back to normal. But actually, DAX has been showing some weakness for quite some time, actually, better part of the summer and also going into here the autumn. And when it broke this horizontal neckline here a couple of days ago, a couple of weeks ago, I mean, the sell-off really took up pace, and there could easily be 5 to 10% further downside here.
And I think also what we just mentioned here, maybe not that visible, but this is actually a weekly chart. So this formation goes all the way back to early 17.
It does. So it's a longer term thing, and you can see yes, it's the weekly chart. So the red line here is also the 200 weekly moving average. We have broken, we are below that, and I can't see we should close above that. So we are in a bear market. Well, DAX has actually been in a bear market for the better part of this year, actually. But there's no real support before around 10,800, and I can easily see it dip lower than that. I can't currently see any other than minor correction to this.
Yeah, we got a challenging growth outlook starting to emerge in Europe. We got the ECB meeting later today, but although nothing is expected to come out of that. Just take a look at the safe haven bit that I mentioned, returning to gold, which is the one I normally tend to focus on. Again, you can see on the chart here that once again this morning we're challenging resistance here at 1240 or 1239. We tried early in the week. We made a shallow correction, and now we're having another go. And you can see on this chart here that we have not really seen any major correction since we start moving up. Does indicate there is some underlying strength in the market. So above 1238, look about just by using Fibonacci, we can see some of the potential next targets that's coming above here. And staying with gold and staying with the charts, this is just I think it's quite interesting to note that we are seeing even though we're seeing a sell-off in stock markets, we have sectors like gold miners, the GGX ETF. It's really started to come back to life with the pickup in gold. And if we should see gold continue to move higher, then it obviously will continue to improve the margins among these gold miners. And we have already now seen, since stock markets or S&P peaked back in September, this index has outperformed the S&P by 20%. Still underperformance on the year, but it's starting to show some teeth here. And if gold moves higher, then the gold miners potentially could be an even better place to focus. I think just before we wrap it up with the outlook, just staying with crude oil. Crude oil is caught here in the middle between the risk of Iranian supply disruptions. On the other hand, we have the Saudis promising to deliver whatever is necessary, and at the same time this global growth concerns. And this basically, Kim, I normally look at Brent, but I think it's very good to look at WTI as well. It looks like we got not really going anywhere there.
No, I have taken a weekly chart here just to give a bigger overview. And yeah, it seems like we are trading in this massive or quite wide range between 63, 50 and 75. I know it's a big range, but it's interesting to see. We can also see that the 55 weekly moving average, the blue one, is coming up, giving some support. So maybe we could see a bounce from around the mid-60s.
And I think that ties in with the fact we still really don't know the full impact of Iranians or U.S. sanctions against Iran. So right now we are seeing some panic selling. There's been a lot of a lot of buying when we broke above the 80 level in Brent crude last month, and we're seeing that being scaled back right now. So some critical levels we're starting to approach. 75 is in Brent is the level that just in the short term that the market will be focusing on. Okay, let's just finish off with the calendar for today. We have a few rate decisions. We have Norway coming up here at 8 GMT, then we got followed by Turkey, and then we got ECB at 11:45. But as Mathias alluded to, nothing really much going on in terms of volatility in the currency markets, so no changes there expected at this stage. On the commodity side, we got the weekly nat gas inventory stock numbers late in the day, but that's it from us. We'll be back tomorrow again at the same time. Thank you.